The fifth component of a truly diversified portfolio is become your own banker with whole life. A properly designed dividend-paying whole life policy, often referred to as the and asset or tax-exempt insurance or the perfect investment, is ideal for consultants and business owners. As business owners, we already put so much risk in running our own business. Why would you want to give everything you work so hard for away to fees, losses in the market, and taxes? Now that you've increased your money mindset to a wealth mindset, you know these two things. Number one is money is emotional. And number two, making money is easy. The hard part is keeping it. If this is the best financial product out there or the perfect investment, why are so few discussing it? And why are even fewer designing it correctly? The answer is a combination of the four. First, term insurance is much easier to sell to the masses. Number two, the media out there thrives on sensationalism and drama, focusing on the stock market's roller coaster ride rather than tax-exempt insurance slow and steady growth. Number three is there's a lack of knowledge and understanding among financial experts, many who prioritize selling over learning about the products that they promote. And fourth is commissions. A properly designed dividend-paying whole life policy pays lower commissions compared to traditional whole life policies. Few financial professionals discuss whole life, even fewer design a properly designed whole life policy. The banks will never talk about this, folks. They'll never talk about whole life insurance unless you qualify for their private investment strategies, aka private banking, which usually starts when you have a minimum of $5 million sitting in their bank account. So let's compare traditional whole life with a properly designed policy. Traditional whole life insurance is permanent insurance that pays a death benefit to the person that's insured, and it does accumulate cash value. The problem is it's usually very insurance heavy and cash light, resulting in high costs and limited living benefits. Now, a properly designed dividend-paying whole life policy is also a permanent insurance that pays a death benefit. It also pays dividends to the policy holders. It is designed to be cash heavy and insurance light, making it very client friendly and affordable while providing all the attributes of a perfect investment. A properly designed dividend-paying policy is very simple. It can be really broken down to two parts. It's the insurance portion that benefits your loved ones or the charity of your choice when you kick the bucket. And then there's the portion that you can use while you're living, often referred to as the deposit option or the DO, ADO, the additional deposit option, or the PUA, often referred to as paid up additions. Insurance companies like to make something that's very simple complicated by naming it a bunch of different things. But really those two portions, the portion for your loved ones and then the portion referred to as the deposit option that you can use while you're living. A properly designed dividend-paying whole life policy has a deposit option ratio to the cost of insurance of 4-1, up to 20-1. This means for every dollar that goes towards the cost of insurance, you can put $4 or $20 towards the deposit option. For an example, my policy, which features an annual cost of insurance of $1.1 million for only $2,821 a year, this allows me to put $44,194 into the deposit option. You can actually review my own policy at the resources tab of designanevenbetterfuture.com. So you can see this. A properly designed policy is affordable and flexible. It ensures that your insurance needs are met at a very low cost, usually by adding a term rider onto it. The deposit option can vary from a minimum of $0 every year to a maximum amount each year. Be careful though. Several insurance carriers remove or limit the deposit option if it is not used. You want a policy that will always have a deposit option available to you whenever you want it. Flexibility is very important. A properly designed whole life policy delivers comparable or better results when you take fees and taxes into account. It competes or outperforms long-term average annualized returns of the stock market and offers a much better risk-adjusted return. It often, with 32 times less risk versus volatility as measured by the standard deviation. This downside protection sets it apart from stock market investments. To beat a dead horse, this does not lose money. Your investments are vested, meaning they never go down. It's like a built-in downside protection that the stock market simply does not offer. This is what makes dividend-paying whole life insurance the world's safest liquid asset. It also forms the foundation for the infinite banking concept and becoming your own banker. This is discussed in great detail coming up here. So let's go over the positives and negatives of a properly designed whole life policy, also known as the and asset, tax-exempt insurance, or the perfect investment. So the positives are the investment portion grows tax efficiently, either inside your corporation or personally held. It's vested, meaning it will never go down or lose money. It's not affected by the economy or the stock market. You can borrow against it so you never have to pay personal tax when you use it. Compare this to RSPs, folks, which are tax-like income or the capital gains that you have to pay on open investments. This is like a very high interest savings account with death benefits. It's private and creditor proof, meaning it's protected. And it helps you control your money like a banker. Now, the negatives are you have to qualify. This, unfortunately, is not open to the masses. You have to have a certain health regime there. But what's nice is if you don't qualify or you don't feel like you're healthy enough, you can have your kids or your grandchildren carry this policy for you, right? That's discussed. That's more of an advanced strategy. Growth is slow at first, but eventually exponential. The dividend is not guaranteed, but it's been paid out since the 1930s, so closest thing to a guarantee I've come across. Premiums do not reduce your personal or incorporated taxes. The minimum cost of insurance must be paid each year, either by you, your incorporation, or by the cash value inside your policy. And there is a maximum of how much you can invest each year. This picture right here clearly shows the positives and negatives of a properly designed whole life policy. Growth is slow and boring at first, but then it becomes very exciting due to tax efficient growth and true interrupted compound growth. In summary, a properly designed dividend-paying whole life policy represents one of the closest things to a perfect investment. It should play a substantial role in your financial security plan, ideally as the foundational piece before considering the stock market investments. Dave Otto, a man I highly respect of DO Financial, observes, when I started in the financial industry over 40 years ago, I offered people what they wanted, stock market investment opportunities. My research 37 years later shows that you get virtually the same returns with the dividend-paying whole life policy that offers significantly less risk and all the attributes everyone wants that the stock market investing does not deliver. Now, I agree with Dave. I also agree with Warren Buffett's advice, don't put all your eggs in one basket. If you were to put all your eggs in one basket, this would be the basket I'd highly recommend, especially for business owners. If you want to make this wealth creation strategy even better, incorporate the policy structured dividend-paying whole life policy into the infinite banking concept. What is the infinite banking concept and how does it work? As an independent financial expert, I have seen firsthand how people struggle to gain control over their finances. If you want what the middle class has, the fear of money, fear of running out of money, fear of the stock market, continue to do what they do. If you want to be healthy, wealthy, and wise, follow the strategies of the wealthy. That's why I want to introduce you to the infinite banking concept, aka IBC, which is a powerful tool that can help you control of your financial future. While there are several books written on the infinite banking concept, I will do my best to explain what IBC is, how it works, and how you can use it to achieve your financial goals in a couple of paragraphs. What is IBC, the infinite banking concept? Simply put, IBC is a financial strategy that uses a properly designed dividend-paying par whole life insurance policy as your own personal bank, as taught by the late great Nelson Nash. Instead of relying on traditional banks, you can use your policy's cash value to borrow the money when needed. Here's an example. So say you wanted to buy a car for $40,000, most will borrow from the bank, right? They ask the banks, can I borrow $40,000? The bank's nice enough to give them. They pay it back over interest. Now, is that the only car you'll ever get? No, the fact is we repeat this up to 8 to 10 times. The average Canadian gets 8 to 10 cars over their lifetime. If you look at this and you realize the bank was nice enough to give you the money for the first car and then you paid them back plus interest, where did they get the money for the second, 8th, 10th car? Well, when you think about it, they got it from you. This is a money-making machine. This is often why we say don't rely on the banks. Become your own bank. Now, as an engineer and brought up to save, I was a saver. So when I bought my first vehicle, I saved for it. I did all the spreadsheets as an engineer would, and I calculated that buying would be the best way to buy a vehicle as long as I bought more than one down the road. What I did not take into account was the fact that when my money left me and went to the car dealership, that $40,000 was no longer earning interest. It no longer was working for me. It's called the opportunity cost. I now know different. And when I saw this presentation and saw where the debtor and the saver end up, it was a game changer for me. With IBC, you act like the saver at first, and then you borrow against your properly structured, properly designed whole life policy. The $40,000 or whatever's in there still remains, earning dividends, continues to grow and work for you. As you can see from the graphs below, there is a huge difference between the saver, the debtor, and the banker. The infinite bank concept is more than just a way to get a loan. It's a way to take control of your finances and grow your wealth over time while still buying the stuff that you want. So why should you use an infinite banking policy instead of a traditional bank loan? Well, for starters, the infinite banking loans can be much more flexible than the traditional loans. You are automatically approved. You can use this money for anything you want, from buying a car to starting your own business to seeing an investment opportunity. How you repay the loan is completely up to you. Hey, if you decide not to pay the loan back, it simply comes out of your death benefit when you die. When you do repay the loan, which is recommended, but it's optional, you use the money repeatedly without going through the strict approval process of the traditional loans. And don't forget this, folks. Banks are your best friends when you have lots of money and you're in good times. But when in need or during down times, or when your business or you are struggling, banks are nowhere to help and can actually add to your problems by calling back their loan anytime for any reason. So how does IBC work? I showed you an example, but let's use a real life example. When you take a whole life insurance policy loan out, the policy loan acts like collateral and it remains working and earning dividends year after year. The cash value grows tax-free, meaning you can earn money without giving it a big chunk away to the government or to whoever you're buying the investment from. You can grow, control, and keep your hard-earned money instead of spending it, giving it away to taxes, fees, or losses. If we consider the case of Rachel here, a successful business owner who wanted to pay less tax while ensuring her hard-earned money continued to grow while she had access with it. With the infinite banking concept, Rachel set up a whole life policy and used the policy's cash value to cover business expenses and large purchases, paying herself back over time. The infinite banking concept gave Rachel flexibility, control, and reduced her tax burden, and she didn't have to jump through hoops to get approved. When you take out a whole life insurance policy loan, the policy values acts as collateral and it remains working for you, earning dividends year after year. The cash value grows tax-free, meaning you earn more money without giving it a big chunk back to the government or whoever you're investing from. There are 8 ways to use your infinite banking concept to finance, vehicles, down payments for investments or real estate. We used it to do the landscaping in our backyard. Children's education. There's more than just RSPs here. Business expenses, including taxes. Landscaping and renos, as I talked about. Anything and everything you currently finances. Emergencies and vacations. So why isn't everyone using the infinite banking concept? As mentioned earlier, it's important to understand the risk associated with the infinite banking concept. Failure to pay your annual premium could result in losing your policy, the insurance coverage, and the savings. That's why making a solid plan and using the policy safely is so important. One drawback from whole life insurance is that you have to be approved. You may be denied, rated based on health, occupation, and age. And the third reason why everyone isn't using the infinite banking concept is that few financial experts even talk about whole life insurance. And if they do, it's usually insurance heavy, so they can get that big juicy commission check. So in conclusion, the infinite banking concept is a powerful tool that can help you take control of your financial future and can be an essential part of a diversified financial portfolio. By using a properly designed, dividend-paying whole life insurance policy as your own personal bank, you can gain the flexibility and control over your finances while growing your wealth over time. While there are some potential downsides to the infinite banking concept, such as the cost of insurance, the application process, and the risk of losing the policy if you don't pay the insurance premium, the benefits can be significant. Is IBC right for you? Ultimately, that is a decision you'll need to make based on your financial situation and your goals. If you're looking for a way to take control of your finances, to grow your wealth over time, and have $10,000 to invest, or maybe $833 a month, the infinite banking concept is worth considering. Using a whole life insurance policy as your personal bank will allow you to gain flexibility and control over your finances in a way traditional banking can't match. So having a clear path on how you use the policy is essential. This might involve setting specific financial goals, such as paying off debt or saving for retirement. By having a clear path, you can make sure that you're using the policy to support your overall financial objectives. Another important consideration is the tax implications of the infinite banking concept. Because the policy's cash value grows tax-free, work with a tax professional to ensure you're using the policy most tax efficiently as possible. A financial planner who specializes in IBC can help you find that tax professional who understands the unique benefits of this strategy. So if you're interested in using the IBC concept or the infinite banking concept to achieve your financial goals, be sure to work with a reputable whole life insurance provider and a financial planner who has experience with this strategy. The right plan and guidance, IBC can be a powerful tool for building long-term wealth and financial stability. You can visit ibcanadagroup.ca to find more information and find an independent IBC practitioner near you. There's also additional resources, including a detailed description of my own policy, which can be found on the resource page of designanevenbetterfuture.com.